Picture this, a talented professional, working late again, but this time, they're not reviewing spreadsheets, they're placing another bet. 3,200 loss this month alone. Now imagine the same person, 6 months later, receiving a different kind of notification. Congratulations on reaching your 6-month milestone. Your 400 lossless reward has been credited.
This isn't just a story, it's a transformation that LossLess makes possible. What if insurance didn't just cover what goes wrong, but rewarded what goes right? As actuaries, we've mastered mortality, morbidity, and catastrophic models. But today, 80 million people worldwide struggle with gambling addiction, and this field remains entirely uninsured. Only 1 in 20 ever formally seek help. And of those who do recover, 90% are likely to relapse in a year. WHO projects that the amount lost by at-risk gamblers is to reach USD
700
billion by the end of 2028. But here's the insight. Addiction isn't random. It follows patterns like age, income, and stress levels. And I believe we can model relapse probability just like how we do mortality.
Introducing LossLess. LossLess is an optional insurance rider that employers can offer alongside existing employee assistance programs. Employees who struggle with gambling addiction can opt in. When they achieve verified recovery milestones like staying gambling free for 3, 6, or 12 months, they receive credits to offset their employee assistance scheme contributions. Verification is simple. Therapy attestations and self-exclusion lists at first, which then scale to banking pattern analysis and biometric monitoring. Does this truly make actuarial sense? Well, we envision having behavioral risk tables, just like life tables, but for relapse risk by demographic, and we aim to apply traditional credibility theory using peer cohort data to refine individual predictions as more data accumulates. But here's the question that truly fascinates me. Can we bridge 150 years of actuarial science with human psychology? Traditional insurance assumes people are fully rational and respond predictably to financial incentives. But we know humans are wonderfully irrational, especially when it comes to addictive behaviors. What if we build models that don't just price relapse probability, but understand why relapse happens? This isn't abandoning traditional actuarial rigor. It's expanding our toolkit to make our current models more accurate. LossLess targets the 94% of people struggling with gambling addiction who never seek formal help. Not because they don't want to, but because existing systems fail them. If we can create viable behavioral risk models, we're not just expanding the insurance markets, we're demonstrating how actuarial science can aid social equity. This matters in a world where inequity and mental health are deteriorating. Every actuary calculates mortality tables. But what if we could calculate recovery, hope, or resilience tables? This opens up collaboration with clinical psychologists studying addiction recovery, behavioral economists researching incentive design, and social policy researchers measuring community impact, proving that rigorous actuarial analysis can create products that are both commercially sustainable and socially transformative.
LossLess isn't just a product, it's a proof of concept that we can ensure behavioral change. We envision an entire ecosystem around behavioral risk insurance. Screw safe for digital overuse, Ring for obesity management, and Calm Cover for burnout recovery. This is the next evolution of our profession. We're not just risk managers, we can be architects of human resilience. What if we can price relapse tables just as precise as how we do mortality tables? Can we price prevention and not just cure? LossLess aims to prove that the answer is yes. For 150 years, actuaries have managed what goes wrong. LossLess proves that we can incentivize what goes right. This is actuarial science pricing human potential and not just human peril.
LossLess is a gamble. I believe it's one we must take.